timely, insightful, discussion and analysis of economic trends and markets. From Southern California to Sacramento, featuring business and political leaders, unique field reports. From Orange County and the campus of Chapman University, this is the Chapman Business Report.
Hello and welcome back to the Chapman Business Report. I'm Pete Weitzner, joined as always by the very fine, nationally renowned economist Dr. Esmael Adibi, coming to you from the top of Argyros Forum. These days one of the older buildings on campus.
Exactly. There's
so much construction. Actually, just broke ground a new performing arts center. Our focus, of course, is business on the Chapman Business Report, and a lot to talk about. We're inside 2 months of the election. We don't talk politics, but some of these numbers might impact what happens on the first Tuesday in November. And then a little later on, we'll duck in our fine student feature stories. Wes Rappaport takes a look at what a lot of enterprises need to do these days with every government tap from the federal on down. In Costa Mesa, a man wanted to build a good Little League or youth ball field for his son, so he took it into his own account, built the field. Beautiful field of dreams, if you will. Wes will have that report a little later on. But boss, let's start with the economic numbers, and it's still all about jobs because you know, it's a stubborn
it's
and
all
weak.
About jobs.
It's all about jobs. Weak job market. Historical records, 40-plus months of over 8%, and we're still over 8%. So we looked at the latest numbers. We're recording this late August, so we have late September, so we have August numbers. While the rate went down 8.1%, that was really the only good part of that report, right?
Yeah, but even that was, you should not count on that. That's not really indicative of a strong economy. The rate went to 8.1 because the labor force shrunk. Still, people are leaving labor force, and those who are unemployed, they're discouraged. So what they're doing, if, for example, if somebody graduates from school, university is pursuing graduate studies rather than, looking for a job. Somebody who's been looking for a job for a long time ultimately is going to say, forget it. I'm going to wait. And of course, not everybody has that luxury, but those who can, they're staying out. That's the reason unemployment went down.
Fair amount of controversy on that. Right, so 400,000 people dropped out. And I think that was, talking of records, like we hadn't had, and in California it was like a 36-year high of people, and that's why the number went down. Now, some say, and we won't keep putting things in political context, but those who say the economy is really bad, and maybe those who they might be more wanting a change in administration, say that's mostly discouraged workers. They've looked and looked. Others say it's more of a demographic thing, that you have people retiring.
No, that's not it. No.
Like you say, people going to school.
Yeah, I don't think retirement is the reason that so much has been dropped. It's true. In normal course of economic, cycle, you get people entering labor force, others are going to leave, either they go through retirement or decide voluntarily to stay. But what has happened to retirement? We actually see drop there, partly because people retire when they feel, they can afford it. And unfortunately, not very many people can afford it for a number of reasons. One is their biggest investment, their home, probably lost so much equity or is underwater. And the stock market, although it's doing pretty good, still, you're not that confident that you can count on that for retirement. And so the argument that people are retiring, that's why labor market is shrinking, I don't buy that argument. The reality is the economy is weak, job creation, by the way, you could look at the half glass to be full too. Job creation is there.
Still positive, about 100,000. Let's look at the number. So we had 90, it seems like it's almost a mistake because it's been the same number for the last 3-4 months. 96,000 jobs. The 6-month moving average is 97,000. A little higher if we went back for the whole year. But just even for the whole year, we're just enough to keep pace with population
Exactly.
growth.
See, what we need about 125,000 jobs every month to really match the labor force growth. And what has been going on, if you look at it for the entire year, the average is about 140 for the entire year. Last 6 months, and you look at the most recent data, we are way below that 125,000. But part of the reason unemployment went down because, last 8 months we did 140,000. The question, really what we are trying to resolve, is that why job creation is so weak.
Right.
Why?
Well, what about this argument of structural unemployment?
Yes.
Again, this would be those, say, defenders of the current economy and administration, that we have structural unemployment, technological shifts. Of course, there's also, some say a lot of folks who can get up to 2 years unemployment,
There are multiple factors. Part of the reason, of course, have been unemployment, compensation. It was a long one. It was going almost 99 weeks
in
for
this
some
state,
people.
right.
Exactly, absolutely right. Some other state was much shorter. So for some people in certain income bracket, it's worth it if you sit and collect, unemployment check rather than looking. So that explains it. Another, as you said, a structural problem. People who lost their job, let's say in construction, mortgage industry, those sectors are coming back, but they're not coming back enough to absorb everybody. And these people have to retrain, retool, and that's difficult. It takes time. Part of it is outsourcing. It's still, if you look at, although some manufacturing is coming back, but it's still we're seeing job going outside. So there's more job creation outside the country than inside. And going back again, when you look at the job creation, why is it so weak? There are a number of factors that explains it very easily. First, uncertainties. Election is coming up, so people don't know, what's going to happen to their taxes. And then we have that fiscal cliff that everybody's talking about, and for some people who may not be aware of it. Last year, when Congress couldn't get their act together and come up with some reasonable deficit spending cutback, they came with this automatic spending cutback of $1.2 trillion over 10 years. So if nothing is done, comes January 1st, we're going to get $120 billion of reduction in federal government. So people are
That's
worried.
a customer for a lot of people.
Yeah, of course. I mean, and it's across the board. I mean, impacts the defense sector, impacts all kind of government spending.
And then the tax cuts, payroll tax goes up 2%.
2%, yeah.
And on the upper incomes, their tax rates go up.
If the Bush tax cut
Right.
is not,
All three things
is not
happen.
extended. And then you look at the state, we have a bunch of propositions here in the state, November, that potentially could increase our taxes. So if you're an employer, let's be very...
Prop 30, and we'll get to that in a bit.
Let's think of, you're an employer, and your output, your demand for your products has gone up. What is GDP's growth? First quarter grew 2%. Second quarter grew 1.7%.
The latest revision, 1.7.
1.7.
You say things will get, you and Jim say things will get a little better.
But let's concentrate on 2 and 1.7%. Let's say you have a business and demand for your products or service goes up 2%, 1.7%. Are you going to rush out and hire a bunch of people?
No, it's not, especially with uncertainty about what my healthcare costs will be, my
taxes is going to be, what would be, is it potential going to be a huge cutback on government spending? So the roots of the problem goes back to weak demand. If there is a strong demand, GDP grows, let's say, beyond the trend line, 3%, 4%, 5%, then employers cannot just satisfy the demand by, squeezing more out of existing workers. The demand is extremely weak. We mentioned all the uncertainty that the weak demand is kind of coming from Asia and Europe, and those are not helping. Almost most of the Eurozone countries are in recession, so it means demand has dropped there.
Which points up government slack, exports are slack, the consumer's kind of holding their own.
That's all the bright side. I mean, what we're looking at,
and
the consumer spending. So when you look at the whole spending, the demand, thankfully consumers, there's enough juice there that they're just basically spending.
And that's pointed up by the relatively anemic job growth, but the biggest increase is in restaurants. It means people are dining out, they feel a little better. They looked at their 401k statements, which are pretty good.
Pretty good, and back to school was pretty good. Car sales is still going very strong.
Backed off a little, but still, what, 16 million pace, or 15 to 16?
No, 14.3. 14.3.
We had a 16 a couple of months ago.
Yeah, but it's
still
right now.
14, we were below
14,
10.
we were below 10. And cars, after home sales and home production,
and that's
cars are the most biggest multiplier, and you get the biggest oomph out of
in our
spending.
best times, what were we at, 17 or 18 on cars per year?
Million. That's when people, of course, remember that was the go-go time of the housing market. People were just taking, home equity, using their home as an ATM machine and buying cars.
By the way, rising gas prices, we'll get to more on that also. 50 cents, negative. That's not going to help auto sales. But let's finish up on jobs. 8.1 nationally. Here in Orange County, we're a little bit below that, certainly in Northern California, but California as a whole, third worst in the country. Again, the oil states, North Dakota, South Dakota, Texas doing better. What do you draw from the disparity across the country? A lot of Midwest states doing all right.
Yeah, but look at what's the driver now in job creation. If you look at, for example, North Dakota, I guess they're what, at 3% 3%,
or so? They're paying people to come live there.
Exactly, and there's a side effect to it. Very many people are frustrated because of all these people coming in. It all goes back to what? Oil. I mean, they're getting oil and they're using the
got the
oil
shale,
and the shell, and that is generating lots of jobs. And since, you know, a state has very small labor force, a small population, they need really to import workers to satisfy that demand.
Interesting. Quick take. Their governor is telling high school students don't necessarily, you know, there's another big debate, don't necessarily go to college. We have good paying, they need those really decent paying blue-collar jobs. They need people for that. And the governor is giving them that advice. Don't burden yourself with debt.
Again, short-term solution at the expense of long-term, you know, gain. But so that's particular for that. Texas is doing it again very well, partly because of gas and oil. So that's
business climate
important
doesn't hurt there, though.
Business climate is good too. But when you come to California, okay, what's the engine of job growth? Obviously, we're getting some boost on professional business services.
Right.
Some of the sectors are benefiting from consumer spending. They're benefiting. Leisure and hospitality is doing excellent. Healthcare is doing excellent. But when you look at the eastern part of the state, again,
development.
That's all it is. Construction and retail.
And that's why San Bernardino files for bankruptcy.
San Bernardino, Riverside, and there was one up
Mammoth
north,
Lakes went, and then Stockton.
Stockton, and all of those areas of the state are in trouble, and that brings the overall unemployment, you know, rate in the state not to go lower than the national average.
Even here in Orange County, where we've had a good run, many of our big companies are doing well. You mentioned Disney Resort, I think, had their best. I know at the second gate, their best. And lower than the national average. We lost 12,000 jobs back in July. Was that anomalous?
Yeah, be careful on that one, yeah. And you know it better than anybody else, and sometimes these become headlines.
Right.
The job numbers, when you look at the local level, you cannot really compare month to month.
Sure.
If you look at month to month,
those teachers,
most of it was government and educational system that laid off temporarily,
right.
And these people are going to come back on payroll when we get the numbers for September. What's important is look at year over year, and year over year we're running pretty good, close to 2%, and that's the best that we have seen.
And
for
you see
Orange
that
County.
for next year as well.
I think so. Barring again, look at we just mentioned all the uncertainty. Gas prices is a major issue. Situation in Iran and potential upward pressure on oil, major issue. Election, taxes, and the facts that payroll taxes are going to go up. I mean, all
we
of
didn't even
these
talk
things
about the state proposition with state taxes.
Exactly.
But also improving over year is our home sales, and here in Orange County, no exception. I haven't seen a number this high. I'm going to be right on this one. Over 3,300 now, 4,500 to 4,000 in the best years.
Yeah.
Of course, a lot of that shouldn't have happened.
Yes.
But that's a pretty good number, up 20% from a year ago. Yeah. Median price, $445. We hit $365. What's going on in the real estate sector?
Well,
good time to buy.
We mention it. See, we mention it over and over.
Actually, you're getting multiple offers.
I just want to brag a little bit. That's what we said, last couple of years. Particularly last year, we said the demand for lower end of the market, homes below medians, the demand should pick up. Mainly because of affordability, and mainly because rents have gone up.
A $350,000 home, you can get a monthly payment that's below $1,000 when your mortgage is only 3.5%.
So you
on
look
a
at it that way.
And a 15-year.
So that's where the really strong activity is. Why rents are going up, and even investors with cash are coming in and looking. Says, well, I can get this home for $350, cash on cash. I'm going to make 5%, 6%, 7%.
The problem is, and you just went through this with your son. Congratulations, buying a home. Can't find the home to buy. There's little construction, and the people who are selling may still be underwater. And so you have 3-4 buyers, right, chasing after?
The inventory has shrunk. I mean, on the low end of the market, as you said, my son and I were looking for him to buy something, reasonable, around 300 to 400,000, and you didn't find as many inventories. Or if there was an offer that he was making, there was a multiple offer on the same property. So what he suggests, lower inventory, a little bit of stronger demand, and that leads to higher prices. So we see on the low end of the market, prices are firming up. They're appreciating. Not necessarily are going to run 10% or double digit, but it's improving.
Or 10% in the last year.
Yeah, but this is very important ingredient of overall housing market recovery. Some people ask us, is the housing market has recovered already, or is it overall recovery? You have to really define what you mean by recovery. Is home prices, stop falling? Yes. The home prices are going to go up 10, 15, 20%. If that's what some people say recovery, we don't see it. It's going to still take some time.
And still falling on the upper end,
exactly.
Right?
So, but you need the lower end of the market to firm up, because that means if I have a condo for 400,000, I can sell it to somebody, and whether I have equity or not, little equity, I can move to something for 500, 600. So basically, you get it from the low end of the market, pushing it up. Having said this, though, very high end is doing very well. I mean, if you look at like coastal areas, even Orange County, you see some oceanfront properties that are getting really nice bid, and that's really kind of a segment of the market that always benefits from a strong demand coming from certain group of people.
Maybe a little stock market money fueling
that helps too, of course.
We're at almost a 5-year high, and almost an all-time high on the Dow. We might get to that in a second, but let's talk very controversial, and the latest boost to the stock market comes from this QE3, quantitative easing. Says simply put, the Federal Reserve buying up, in this case bonds, makes the makes the real estate market more liquid, but controversial. You're not a big fan, I know.
No, I'm not. But of course I'm not making the decision. As most people know, the Federal Reserve, since trough of recession, they started buying mortgage-backed securities, treasuries, mostly long-term instruments. Even they went through selling some short-term instrument, buying, very complicated. And the purpose, the objective that they express officially is that we want to keep mortgage rates down, we want to keep long-term rates down to basically help the housing market to recover. And if housing market recovers, the economy is going to recover, because if homes inventory shrinks, builders are going to build, and construction workers are going to be hired. This is official. But I think at this point, that's why I'm not kind of in favor of it. Buying more long-term securities, mortgage-backed securities, and bringing the mortgage down, let's say right now, 30-year fixed at par, means no point, is about 3.75%. You bring it to 3.5%. I don't think at the margin is going to help, but it's not going to be really that important, 0.25%. If we were at 8%, bringing it to 4% makes a big difference. So what really the objective here is to shore up the stock market. Although, the Fed in the past always shied away from, tying their action to the stock market.
It's not part of their charter, is it?
Exactly. But what they're thinking is, okay, we buy these securities so the money goes into the system, so people are ending up with cash, not necessarily you and me, financial institutions, bank, insurance companies. What do they have to do? They have to chase yield, so they put it in the stock market. The stock market goes up, people feels peachy, and then in turn they're gonna spend more.
How do you explain, by the way, that we have maybe a fifth of the S&P 500 at all-time highs, another 50 or 75 or so within, say, $5 of an all-time high? How do you explain that? It's not just Apple.
No, that's all it is. Actually, Apple is doing it for good reason,
right? Because
there is a demand there.
Right.
But in some other cases, what people are doing, as I mentioned, you look at the company, by the way, I'm not advocating anything, but you look at a company like GE, Abbott Lab, they're giving like 3.5% dividend.
Right.
So you put, let's say, $10,000 buying these companies, you get 3.5%. If you put 10% in a bank account now, what would you get?
Less than 1%.
Oh, nothing. Probably 20 basis points, 0.2%. This is what really fueling the stock market. People are saying, what's the alternative? Where am I
Easy
gonna
time
go?
For big companies to make money.
Especially dividend paying companies have seen a big run up in their stock prices. But again, remember the objective here. The Fed is planning or hoping the recovery in the stock market would spill to consumer spending, and that would spill to more demand, and more demand creates more jobs.
I'm going to make you be a little political, I suppose, because it is a ballot initiative, but here in California we have Prop 30, which is proposing to raise the sales tax statewide. Most cities are higher because they have, here we have the Prop Measure M, and we have public safety, but the statewide levy would go to 7.5, up 25 basis points, if you will.
Yeah.
And income tax on those who make $200,000 would go up as high as 12 to be the highest in the nation.
It would be 12.3% at the high end of the income
for 7 years to raise $8 to $9 billion, and those proposing it, Governor Brown would say to stave off more cuts in education. How, in your view, as an economist, how should this go? Because not that many polls. I think it's very close.
Oh, it's very close, and probably it's going to pass. My guess is, because usually you see those people who are directly are going to get hit hard, and that's school employees and state employees and city and county. They're going to come in masses and vote for it.
There's not much sympathy for those who make $200,000 these days.
I know. Oh yeah, 200,000, and actually,
which in California,
even
if you have a family,
that's not enough. That's not enough.
Maybe
That's for
get
sure. And that's part of it, the national debate that is going on. When president says 250 is the margin, everybody says, yeah, 250 maybe in North Dakota is plenty of money, but in California,
you're
250, of course, it's good. It's a comfortable life, but it's not. You're not rich, you know, if you have 2 or 3 kids and sending them through school and college.
And what would this do to the business climate?
It's going to make it negative. We are already, when you put all the taxes together, I believe we're number 48 or 49
There's
probably.
2 states, New York and New Jersey are the only ones nonpartisan judged to have a worse business climate.
Exactly. So if you increase taxes both on sales tax and income taxes, those are major components of
sales
taxes.
tax is regressive.
Exactly. Oh, that's definitely. I mean, if it comes to imposing taxes, I'm always going against sales tax, because, you know, everybody says higher percentages, and relative to their income, they're paying more income tax. I mean, sales taxes. But having said this, the alternatives are nasty. Either way, you know, the difference is, one, if you don't get these propositions go through. By the way, there is another competing proposition on the ballot. I'm not sure about the number. I think it's 38, which that also imposes just income taxes, but on broader group of people.
Sure.
If these go on, you know, pass, basically what the society says, that we're willing to pay and support jobs in the government sector. I mean, government plural. Or if it doesn't go through, then government
Society
sector
is
going
saying you're still bloated.
Exactly. You have to cut back, and that
we'll
would
see
be
an
painful.
example in a few years, a few minutes coming up of on the private sector building something the government would have done, building a ball field.
Yeah, but
for
it would
kids.
be painful. I mean, no question. When that
either way,
it's going to be one group versus another.
We
and
talk about auto sales. You know, we might only say 0.25%, but when you buy a car, that's a couple $100.
But let me make a very important point, that on this issue, I'm not taking any side one way or another. What I'm bringing up, and I always mention it, that I would have loved to see these propositions, either one of them, to come with some fundamental changes. Unfortunately, this would
we had
be
pension reform. We'll talk about that in our next show.
It's not enough. It's not
incremental.
enough.
All right, we got a minute to go. Would you rather talk about Apple or Facebook?
Apple is a success. I guess Facebook is what? What did they do? What's their stock? 20?
20. So it's half of the IPO of 38. They're going to take on Google now in search. You follow these stocks pretty close. What can they recover the mojo?
It's going to be tough. It's going to be that industry, social media. I mean, it's amazing how much competition is, and you know, you come in and you draw quite a bit of customers, or in this case, what is it? People sign up for it, and then you have
users.
To eventually
900 billion.
Yeah,
900 billion, 900 million.
Oh, not billion.
900 million.
Not billion.
Yeah,
that's for sure.
900 million. But I'm looking at Apple's numbers, and I'm thinking.
Yeah, but ultimately, it's all of these users have to.
You think
generate,
there's residual bad will out there from people who bought Facebook?
Oh, I'm sure. That was a bad pricing that they did. I guess they went
even
too
the
high.
insiders aren't doing so great at $20.
Some of the people who were selling these, actually, the big banks are holding some of those stocks, so they're big losers too. They priced it wrong, and I guess the market just gave them a good lesson. Don't do it next time.
They made a mistake. The mobile app, they didn't have. It's hard to believe they would make a technological mistake, but they did that.
Yeah.
We're going to go to break. Show you an Orange County company I know the boss has liked for many years that's doing quite well. That's Western Digital. Then when we get back, we'll talk to you about that Field of Dreams that they just built in Costa Mesa. Stay with us in the Chapman Business Report. Welcome back to the Chapman Business Report. Pete Weitzner joined by the boss, economist here, Dr. Esmael Adibi. Time for our student feature stories. We've talked, boss, the last few years ad infinitum about the plight of federal, state, and local governments. And here's an example of an individual who took matters into his own hands. Local governments, cities like Costa Mesa, can't afford to build ball fields, so he did it. Wes Rappaport reports on the latest Field of Dreams.
We welcome everyone to the grand opening of Sun Devil Field here in Costa Mesa.
A father's aspiration to find a field for his son's baseball team was fulfilled on Saturday as Sun Devil Field, the new home of the Orange County Sun Devils, opened for its first weekend of games. Bob Klein and his wife Beta founded the OC Sun Devils in 2008.
We couldn't find a place to practice and to play games that was kind of state of the art like we wanted.
So the Kleins, whose son Trevor plays for the Sun Devils, decided that the best way to guarantee a field to play on was to build one. Those connected with the project liken it to the 1989 film Field of Dreams.
Kevin Costner thought he had it hard, turning a field of corn into a baseball field in the middle of nowhere. But he had nowhere near the courage that Bob had in attempting to entitle property in California.
They enlisted the help of other parents, recruited former Los Angeles Dodgers coach Mark Cressy, and together they created a 4-acre sports complex, a project that would take 2 years from start to finish.
This represents something done not by the government, but by an individual who has a dream and wants to make something happen.
It's a time for our family to spend more time with our son doing something that he really loves. I can't describe how important that is.
Through his ambitions, Bob Klein has proven that this field is truly a labor of love, and everyone involved is looking forward to being a part of this unique field of dreams.
Play ball!
And I've been told that this fence is movable, so as the kids get older, the challenge can still remain. In Costa Mesa, Wes Rappaport, Chapman News.
Our thanks to Wes for that report. Boss, I know your son was an athlete, El Toro, right?
Yes,
so you
basketball
can appreciate
player,
that,
of course, beautiful facility, beautiful.
And it's shocked, I'm sure it did you to more than ever. High school sports, prep sports, youth sports have always been big, but never bigger. And I think a lot of it is the parents want the kid to maybe even be good enough to get a college scholarship.
Of
There's a
course,
new factor
that's the goal,
involved. That's the goal.
Or get to NBA or NFL.
Hit the jackpot. Our thanks to the boss, as always,
My
Dr.
pleasure.
Esmael Adibi and Jeff Cole, class of 2001, and his crew, Jeff Cole Productions, Haley, Dan, and Ryan, for putting on the Chapman Business Report. We'll see you again next week, another edition of our show. I'm Pete Weitzner.
Funding for this program was provided by Chapman University.